Okay, guys, so I'm going to be talking about the clouds of liquidity formation, which I speak about a lot on this account. I'm going to be honing it in again in this video. So, what you're seeing in front of you is a screenshot or a few screenshots of what I had taken on the DONSLUVSFX Instagram account about gold. So, this was taken today, and the actual post itself, this is a story that I had posted on the 4th of July about gold potentially continuing to go long. Now, what you're seeing right in front of you is that if you go on the DONSLUVSFX Instagram account and you go on the highlights, it's TM5, you'll see that I made that post on the 4th of July speaking about potential areas where retail traders are looking to go short. And I've highlighted this in this part of the presentation over here. I'm just using PowerPoint to organize everything together because I took screenshots quite some time ago and some of them I took today. But the post I made, like I said, was on the 4th of July. So what you're seeing in front of you is the same thing that I spoke about, where potential areas for sellers to look to go short are being highlighted by these green boxes over here, which I made on the 4th of July. And on the right you can see this is a retail sentiment. So this is what most retail traders are looking at on the symbol, which is gold, right? They're looking to go short, and about 63% of them around the 4th of July were looking to go short on this. And I can sort of see why, because this happens every single time where a market breaks down and there's equal highs or equal lows, and people are potentially looking to go short if it goes back to that area, if it's going long, or people tend to buy if it's going towards that equal low. And this is actually how true money is formed in a market. This is generally how liquidity is engineered. And I spoke about this so many times. I think I've made a video about this on this account, speaking about this exact same concept. So in these areas, this is where I highlighted where people are potentially going short. And this is what induces that cloud of liquidity to the top side. And even the sentiment, or even this institutional sentiment on the MetaFX website, supports that bias that I had back at the 4th of July, right? So let's just go on the chart right now. Let's just close this and let's just go to that chart because I've actually drawn it in. So you can see what I had shown you on the PowerPoint slides. This is exactly that same price action that you're looking at right now. So I went back in time. It's not picture perfect like I drew it on the 4th of July because I deleted it and now I just drew it again for the sake of this video, right? So this is what is happening, or this is what happened. So around about this time, you're seeing the exact same thing where people are starting to go short, starting to go short, starting to go short, starting to go short, starting to go short in 1, 2, 3, 4, 5 in these areas. In fact, there could be many areas within this price action around about the 4th of July where people were looking to go short. I don't know how people think, but generally it's very similar. In fact, I actually do know how they think. This is exactly why I actually am making this, because most people would think in terms of patterns. They would think when it's if the price is too high, it's time to sell. If it's too low, it's time to buy. And in some cases that's true, right? But then what happens is that if you learn patterns, you will end up taking every single one of them, because patterns happen every single day in a market. You can literally find what they learn through whatever they are learning. You can find that every single day on every single time frame, right? And what happens is that if you take those trades, you're going to end up having random results. And that's what happened to me over the last 2.5 years. I was in that cycle of learning patterns and learning how most people trade, the retail mind trade, the retail mindset. And I would get random results, and those random results wouldn't make me profitable in that time, right? And it only happened when this cloud of liquidity concept was honed in. There's a lot of things that were honed in, but the most powerful concept to me is this whole cloud of liquidity thing. This is absolutely so powerful that once you see it, you can't unsee it, and you'll just outperform everyone and even your own beliefs. So let me just get straight to what I wanted to tell you, right? So this is what you're seeing during that time. And I spoke about what gold is doing. It was going sideways and backwards, sideways and backwards. It was breaking down. It was going sideways and backwards, sideways and backwards. And if you look at it on a daily time frame, it was going long, and it started to form a short to long term stage one where it was going sideways and backwards, consolidating, right? So even though the daily sentiment, which was an institutional sentiment, is going long, it's green across the board. That means I know that gold is overall going to go where long. It's gonna go bull. It's gonna go higher and higher and higher and higher. It's bullish, right? That's where money wants to go. There's a difference between understanding what money wants to do in a market and what it is doing in a market. And that's probably one of the most powerful things also that I can tell you alongside that cloud of liquidity concept. If you can understand, and if you, for any single chart, if you can understand what price is doing versus what it is going to do. In fact, you will never know what it's going to do, but just understanding where it wants to go versus what it is doing, it's so powerful because you can stay out of bad price action and you can get involved in much better, more clean price action, which will give you better results in the long term. Because that's actually how trends sustain themselves. They sustain themselves through this formation of liquidity, where hedge funds, banks, some Saudi Arabian sheikh who's probably has no clue about trading. He's probably shorting, yeah. Some dude in America who's sitting in a basement with his $20 account is shorting over here. Millions and billions of dollars are being shorted in this market right here during that time. And that's what I saw. So the bias I had is for gold to continue going along, and that institutional sentiment that I showed you, it supports that bias alongside the fact that most retail traders are going short. So that's where the money is. So I had anticipation that okay, this is going to go long because it started to make protected or increasing protected lows on lower time frames around here, and it started doing that over here. It started doing that over here, but it also started to do that over here. However, I started paying attention over here because price stopped breaking these lows over here, which is a sign that okay, something is something's coming in, money's coming in, price is being held above these zones, and there's a likelihood for this price to continue in going long. And voila, that's exactly what happened over the last few weeks. The same thing happens over again and again and again and again. And this is exactly where people were looking to get short in these green boxes. And every single person, their mom, their dad, their uncle, their dog, the hedge fund, the Saudi Arabian sheikh, the dude with his money, $20 account in the basement, he probably got liquidated. All of these people, this is millions and billions of people getting liquidated. I can bet you right now somebody's, girlfriend left them because they chucked their life savings saying, oh, it's going to go short, honey. They're probably homeless now. I'm not saying that I wish them on them, but I just understand how trends function right now, and I just understand how people think, and most people think the same, and this is exactly why trends will sustain themselves. And this is most likely going to be in a stage two. So what you're seeing right now is a stage two on a 30-minute time frame. So obviously time frames are just ways to gauge how orders enter and exit a market. So you might see the same thing on a daily chart versus a 1 minute time frame and a 50-minute time frame. Right now, what's happening on the 30-minute time frame, which is the time frame that I normally look at to get context about what is happening in a market. And like I said, it's any market. It's not just gold. It's not just forex pairs or stocks or whatever. You can look at it on any price chart, right? What is happening right now is that it's entered a stage two on a 30-minute time frame. All of this action right here, as you can see, like it stayed relatively in the same price range for like the whole of June, possibly the whole of May as well. And from about the beginning of July onwards, it started to create a stage two. So what is happening right now is that the probability of this price action remaining in a stage two is going to be much higher than it is for it to go sideways and backwards. And also the likelihood of the price going down and absolutely going to a point where people are just starting to short it because everyone believes, okay, it's very high, now it's time to sell. That also induces liquidity. So therefore, the probability for this to continue going long, not saying it's going to go long like that, but the probability for gold to increase is much higher than it is for it to do this and to do this. However, there's a possibility that a sideways action can still happen, but the probability for gold to actually decrease in price, it's very unlikely. And if that happens, that could maybe be one move. And yes, there's always possibilities of that happening. But one thing with trading is that you don't really fixate on possibilities. You fixate on probabilities. You work with the probabilities of the said possibility. And it's better to go with the money than it is to go against the money, because if you go against it, you become what is liquidity, which will ultimately get destroyed in the future. That's exactly how people lose money in markets, and this is exactly why most people fail at trading in their first few years, is because they don't understand this. And I keep speaking about this all the time, but I don't care because I want you guys to get annoyed about me speaking about this all the time, because this happens all the time, every single time. I can actually go back in time and show you. In fact, this video right here, Don's Mindset, I have the tab open just to make the video quicker. This video over here, I spoke about the longs on gold, right? Let's actually clear all the drawings, right? Let's go on a higher time frame. So let's go maybe on a 4 hour. I spoke about the longs, right? That video, Don's Mindset, I spoke about the longs on gold around about this area over here at the back of March or the back of February. It was around about, I remember now, because it was just going sideways and backwards, because it made an all-time high around December, because I remember I was in Joburg that day, and it started going sideways and backwards, because that's what happens when price moves very quickly. you know the law of averages will say that it won't go up forever and it won't go down forever. So on average, it's likely to return to stabilize and then continue going long. Because notice what happened, guys. Like, this is perfect. This is absolutely perfect. Like, notice how it's been going long, it's been going long, it's been going long, it's been going long, and it started to go sideways and backwards from January, for the whole of January and February, and it just continued going long again. And I spoke about the exact same thing on this video right here about the cloud of liquidity being engineered to the top side. And I think I spoke about that roundabout, I think it was about the 20, roundabout like the 3rd of March. I made that video. I made the video around here, around the beginning of March, because I spoke about how I started watching gold over here. I started watching it over here. I didn't really trade and I didn't get involved over here. I started watching it over here. I remember because this day there was red news that happened which crashed the gold price during that day. And the next day, on the 30-minute time frame, it started to show signs of increasing protected lows. So I started watching it that time, and I started speaking about gold potentially going long over here in all these areas over here. And I only started to trade over here. I remember I didn't really trade the whole thing, because you're not obviously going to trade the whole thing, but even just one slither of the thing, you can literally increase your whole account. Because what happens right now is that, look at the market condition, and this is a 4 hour chart. I'm not looking at it on a 4 hour chart when I traded back at that time. I looked at it on a 30-minute chart, but you can see, like, this whole thing over here is stage 2. That whole thing is stage 2. This whole thing is stage 1, stage 2, a short term stage 1 over here, relatively short term stage 1 over here, into a more transformative stage 2, which continued over here. And the one thing, if you understand fractality, which I speak about a lot, is that there are numerous stage 1s within the stage 2, stage 1, stage 2, stage 1, stage 2 within these. There's a stage 1 over here, there's a stage 2 over here, there's a stage 1 here, there's a stage 2. but then these are 4 hour time frame, stage one, stage two, stage twos. So there are multiple stage one, stage twos, which all these stage twos are bullish, right? So if the price has been going in a long term stage one for like 2 months now, so based on what I've just shown you right now, what is the probability that this stage one is now turning into stage two? There's a stage two that's about to form right now. It's starting to go long because we've just been in a stage one from May, June, and now it's starting to go long. And I've shown you the cloud of liquidity that was formed on the 30-minute time frame, and this is the exact same area over here. Now there is a potential for that further stage two, for it to start making more all-time highs. I don't know why it's not drawing now, but there's a likelihood for it to go even higher and higher now because it's out of that stage one. Now it's starting to go into a stage two, and it's most likely going to increase in price. But that's just what I wanted to say. I spoke about the same thing that I spoke about during this video around about this time, around February, March. You can check the video. It's the exact same thing I'm speaking about in this video. The exact same thing, the exact same concept, where you have an understanding or I have an understanding. Let me speak for myself, right? This is MetaFX. Shout out to these guys. They literally taught me everything that I know about trading. Go check them out, guys. Beautiful. So you can see, right? Everything 77%, right? This is actually the daily. So I got it right. It's the daily, right? So this is on a longer time frame, and then this is the intraday. Yes, it's the intraday. So this is more on a short-term basis. This changes quite a lot because it looks at like lower time frames, and this looks at a higher time frame. So it actually takes true trend. So if this is overall bullish, the anticipation or the bias that I have on this asset is for it to go long. Now, it can do that in so many ways, and that is what I meant at the beginning of the video when I said there's a difference between what the price, what where it wants to go and what it is doing. And if you have that understanding, you know when to stay out of the markets, and you know when to stay out of bad price action, and you know when to get involved once that money has shown you that it wants to get involved. But you have to let that play out, because even when that stage or that potential stage two is occurring right now, it could still break down and possibly go into a more sideways environment. That is possible. However, with the fact that this is supporting my bias of gold wanting to go long, and to be honest with you, gold has actually been long since 2007 if you look at it on a bigger time frame. But I understand that markets are fractal, and you could see the same thing on different time frames. So this is why I am saying gold is going to go long, because I have the understanding that since cloud of liquidity is to the top side right here, right? Because now people are starting to look, they're starting to sell. Actually, let's go on the FX sentiment and let's see what people are doing. Let's actually check, because last time I checked was on the 4th of July. Let's see what people are doing now. Because so here we go, 66%. So people are still looking to go short. And look what gold is doing, guys. Look at what it's doing. Is it this is the recent price action right now. Is it showing you any signs? In fact, I don't even think you have to be a trader for this. Like, just look at this right now. This thing is going up, and people want to go short. They're selling it. So they are anticipating the price would decrease, right? But this is exactly what I'm speaking about. And I've spoken about this so many times. This is what creates true money. And this is exactly why this will sustain itself. And this has been happening throughout the whole year. And this has been happening for a very long time. And this is exactly why. Let's go on a daily, actually. The same thing that I've just shown you right here, right? This is exactly why this asset has been bullish the whole year, and all instruments have been bullish. So literally from around about that time. So what, 20th of February, this is when I started making that video, right? This time of year, look where the price is right now. It's here. And people were doing the exact same thing, selling it during that time when they started to see an all-time high over here and they think it's time to go short. But that's exactly what induces that cloud of liquidity over here. You know, cloud of liquidity is going to be induced over here because people are shorting it. And this is why you'll find that over time that this price will just continue going long. It'll just continue going long and people will be left wondering what is happening. So yeah, that's exactly what I wanted to say, guys. It's happened again. It's happened again. That's all I could say. It's happened again. This the cloud of liquidity concept never fails. It's beautiful when you actually understand how markets actually work. And a lot of people think that no, you should trade this market, and people talk about this price. And I always say to them, guys, it's not really about the market itself. It's not about the thing you're trading. It's not about, okay, gold. It's not about forex pairs or Boeing stock or crypto. It's just understanding price and just understanding how it functions. It's understanding how money comes in and how it comes out of a market. It's simply understanding these things. And once you understand how money enters and exits a market, and once you understand how price delivers and what it looks like when it's not delivering and what it looks like when it is delivering, if you can understand that, you can trade any single market. You can be an investor, because I know investing is for long term. You can be an investor in any single market. In fact, let's do this right now. I want to do it right now. Let's do it, right? Let's go on Bitcoin. Let's go on Bitcoin. So do I have Bitcoin in my watch list? Okay, here's Bitcoin, right? So let's go on a let's just go on a weekly time frame, right? I've not actually looked at this, right? Okay, so this is the all time for Bitcoin, right? Because yeah, this is when Bitcoin was actually formed, and this is where the Bitcoin price is right now, right? So as you can see, it's increased in value. And if you go back to the MintFX sentiment, because they have Bitcoin on their sentiment viewer. Yeah, so where's Bitcoin right now? So Bitcoin is where's Bitcoin? Where's Bitcoin? Bitcoin is right here. So right now it's about 56% bearish, 44%. So if you're trading, that means long term you probably won't be looking at this at all, because there's no trend whatsoever. Because it does make sense, because judging from the weekly time frame, it has been consolidating since the beginning of March. So you can see that it made a long stage 2, and then now it's within the stage 1 that's occurring on a bigger time frame, and it's been occurring for about 3-4 months now. So that's why this is reading about 56%, because there's no trend at the moment, and it's been doing that for a long time right now. But overall, if you can look at the chart, and you can see that without even looking at the sentiment, where do you think Bitcoin is going to go? Because it made several all-time highs during the past 12-14 years, right? It's made so many all-time highs. And what is the likelihood for Bitcoin to actually do this? It's relatively high, in my opinion. It's over the coming years, it's likely to go higher than it is for it to go down lower and lower. And yeah, this again, it's a possibility, but again, we're focusing on probabilities here. So that is the whole concept of cloud of liquidity, and understanding how to read price. You can take this concept and you can apply it on any single chart. Like, that's the whole point about why I made this video, was just to hone in that again. So yeah, anyway, if you got this far, thanks for watching.